Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, September the 14th, the year's 2021. Let's talk trading little by little, part two. These videos are for educational purposes only. Your results may differ from mine. I had a couple of questions out in YouTube land and on Facebook, etc. Seems like there's some people who aren't understanding some of the methods that I've shown. And I guess there might be some new people, and there's always questions. But one of the things I want you, uh, new people especially, to understand is learning is something that you have to do little by little too. You can't expect to learn the whole thing in one shot. Now, some things are simple, and what I mean by simple is they're not complex. There might be only one or two steps to it. So, for example, here, like the wall method, it's pretty simple. H1 candle or opens between two lines. So in this case, it opened between the 50 and the 40. So you would look to go short at the 40 because the H1 candle would be red, and you look to go long at the 50 because the H1 candle would be green. That's simple. And that's what you do. And the reason this works is usually the range of the candle per hour is bigger than 10. So it's going to have to cut across one or both of these lines. It's not a very difficult method. Of course, we refine it a little bit. We'll maybe come down to the M5 time frame and see how many times it's tested this level to determine whether or not to take the trade. And so here you can see that it had tested this level once, cracked it once, tested it a second time. So taking this trade here seems like odds may be in your favor, but you don't know because one time it may work and one time it may not. So for example, here it didn't work, but here it did. And as I mentioned in the little by little in the first part, that's one of the hard things about trading is you can do the exact same thing, but you'll get a different result. Sometimes you'll get a win, sometimes you'll get a loss. And that kind of goes opposite about doing the same thing and expecting different results. So in this case, different results are to be expected. Because usually if you do the same thing over and over and expect different results, that's kind of like the definition of insanity. But in trading, doing the same thing, for example, going long here over and over, sometimes you're going to win, sometimes you're going to lose. And that's just one of the little things you have to learn about trading. So that method, I think, should be pretty clear now. I think somebody had some questions about the rat zone. One of them was, where can you get the rat zone indicator? Let's see, where is the rat zone? Here we go. Well, if you were talking about just the rat zone, it's the TRO rat zone, and you can go out to Crestlick.com and look in the MT4 mother loads, and that's where you get the rat zone. In fact, there might be also in the Never Lose Again thread, or there might be a rat zone thread. I really don't remember off the top of my head. So in this case, why do we do the rat zone? Well, price is going to make a low for the day in reverse. It's going to make a high for the day in reverse. It does that day after day after day. So all we're doing is taking advantage of this. Once again, it's a little thing. And what I've done is, how did I determine the rat zone? Well, I just ran a frequency distribution on the wicks. And that determines, and it came out to be 20 on the pound dollar. And so it's 20 seemed to be pretty good across the board, except on some of the exotic pairs or the lesser traded pairs. But on the pound and even on the euro, it seemed to work pretty well. But in fact, if anything, I might have to redo these simply because the pound hasn't been responding or hasn't been ranging like it used to. And then I also came up with something I call the smart rat zone. And I believe that's here. And what the smart rat zone does, let's see, or is that part of HL5? 2. No, the smart rat zone was on the other one. What that does is it looks to see, it does the calculation in real time. So maybe it's 19, maybe it's 17, maybe it's 20, maybe it's 21 for those different rat zones. Let's see, where was that rat zone? See, we're just looking at it. That's the Wick Zone. Rat zone. Why did I have that on M30? So with the smart rat zone, if we turn that back on, so right here, yeah, it's actually the smart rat zone for the green rats is at 40, which is about 4 pips less here, 40.9, which means over the past, I think, 100 days is what I think I have it set at. Let's see. No, past 250 days. So what it's doing is it's looking at the close minus the low for the past 250 days, and it's looking at where is the level, the 20% level, and it would be right here. So in other words, we look at the top 20% and the bottom 20%. And so for the top 20, you can see here, it's at 94.7 versus 93, so 1.7. So it's making the rat zone slightly smaller in both cases. That's the smart rat. And the whole idea is that price most likely will not close at the end of the day within these ranges. Sometimes it does, sometimes it doesn't. But you can see usually it doesn't, and that's where we came up with the smart rat. So rather than just having to run the calculations yourself every month or every week and readjusting things by hand, let the computer do the work. And I'm trying to remember, I think there might have been a question about the Wick Zone. And the Wick Zone is simply just the area of the wick of the previous day. And statistically, price doesn't like staying in that area. And as you can see here, just visually, price got into the upper wick zone, it came out, and it came out this side, dipped back in, came out, dipped back in, and come out again. For whatever reason, price doesn't like to stay in there, and it usually leaves it somewhere between 70-77% of the time, once again, based on what pair you're looking at. And one of the things, little by little, you have to learn to get the right tool for the pair or the right pair for the tool. So if you want to trade the wick zone, then what you have to do is analyze the pairs and see which pair works best using the wick zone. And that's one of the ways I trade it from a statistical standpoint. And I do that with just about every one of these methods because they're statistically based. So for example, the buy zone, statistically based, simple method. If price goes open plus or minus 10, chances are it's going to go open plus or minus, 50 more times than not. And if it goes open minus 10, chances are it's going to go open minus 50 more times than not. And you can see here, you got burned if you took that short trade, it would have been stopped out. But then if you took the long trade, it more than paid off. And the pivots, nobody asked any question, but as you can see, I believe we took out today's. Did we take out today's pivot? Yes, we took out today's pivot. And the pivot trading plan said price near the pivot point bias is long. And price got near the pivot and took off to the upside. So little by little, you're going to learn different things about trading, and you're going to learn how many things that are being posted out there just really don't work. And it's kind of sad to see it happen. In fact, I met some new people over the weekend, and they were interested in trading to some degree, and I was explaining, uh, some of the things that I've done over the decades, and why if you Google the Rumpled One, you'll see, there's people who like me and people who hate me. And, usually the people that hate me are the ones who are trying to, separate you from what's in your hip national bank, also known as your wallet, um, because they have something to sell you. And in fact, I'm really curious if there's been a study to see how much time, in a 24-hour period, you're bombarded with an advertisement to sell you something, whether it's through the TV, the radio, online, text message. I mean, it's just constant bombarding us because we're a consumer based economy. One other thing wanted to mention here. It's really interesting. You see this huge candle came up, shot through the ATR zone, came back down. This is something the pound does a lot, coast to coast to coast. That's what Walmart and I call it. Just goes coast to coast. So from the low of the day to the high of the day, then back near the low of the day, and it clears these ATR zones, or goes from it. So that's the coast to coast part. Now, we had news, and the news looked bad for the dollar. But what did the pound do? It shot up. Well, later today, we're going to have the same news on the pound. So sometimes, rather than listening to the news, it's better to watch how the market reacts to the news and not even know what the news is. That way you're unbiased. Oh, it's good or it's bad for the dollar, so then the pound should go up, or it's bad for the pound, so then the pound should go down. So, and in this case, it was bad for the dollar and it shot up, but look what happened. It came right back down. So this is one of the things that this is definitely a return bar. You let that hour play out, and here you have the highest open right here, and you could just take that short. And since it's a return bar, you look for a price to come back to the open. Does it work every time? No, it doesn't. Does it work enough to make a profit? Yes. But remember, you're the one in control of the profit, because if you got anxious, you could have popped out at 2 or 3 pips. But you see, you would have missed out on what I like to call the Magilla trade, where you put a lot of lots on, and you get a lot of pips in your favor. And as you can see right here, price got down into the 40s and launched right back out of what I like to call the launch pad. Anytime price is in a 40, whether it's 38.40, 37.40, 14.40, it's just something about the 40s and the pound, it launches. So, fellow traders, little by little, that's how you learn. And so learn, it's not what you trade, it's how you trade it. So go out there, drain the banks. Please hit the like button, subscribe if you're not. This is the Rumpled One. Over and out.